Hello and welcome to Edison TV. Today I'm speaking to the executive team at Devolver, a leading publisher and developer of indie video games. Harry, many thanks for joining me today.
Well, thank you. Thank you.
And can you start off by really introducing Devolver, explaining your business model, and perhaps just talking about how you are different from other games developers that people might think of?
Sure. Well, simply put, we're primarily a publisher of small indie games. We do have in-house development now, but our major core business is publishing. The teams we work with are quite small. They can range from one person up to 15, 20 people, sometimes maybe a little bit bigger than that. And really our role in this whole process is not only do we provide funding to help them through the development cycle, but we also provide a host of services really depending on their needs as a team.
Thanks. And so what really differentiates Devolver from traditional video games publishers?
Well, we really focus on new IP, whereas the traditional publisher focuses on existing franchises and the sequels that come through that, right? Our specialty is working with new and distinctive games and helping them find their audience. At the same time, we can offer the same services that a AAA publisher does to their portfolio and to the games that they work on. But through this, we can provide a well-crafted, unique game. And one thing that gives us great pride is that many of our games are not only nominated for, but win awards every year. And this isn't just a bragging exercise. It also has real financial consequences and meaningful benefit.
That's very helpful, thank you. And turning more towards indie games in general, where do they fit into the overall gaming industry in this current environment we've got, where we've seen AAA games budgets balloon, a real focus on sequels rather than original content? Yeah, where do indie games fit in all of this?
Well, indie games are really the lifeblood of innovation in our industry. And a lot of that is based off what you just described, in that AAA are so huge and phenomenal budgets, they really can't take risk with new IP, new game mechanics. It's just too much at stake, right? So with indie games, they come to market quickly, they can adjust quickly, and I wouldn't say following trends of the market, but can adjust to trends, right, where appropriate. And it's a more exciting output for someone who really believes in it's their hobby to enjoy games.
So what makes a successful indie publisher?
Well, really, you need to demonstrate measurable value, right? Also, it's important that the publisher understands the importance of the relationship with the developer themselves. And also it's key to understand that they, just like us, want to see value in their own company grow, and you have to respect that. And then beyond that, it's really anticipating and proactively reacting to change in the market, because it's always coming.
And what about scale? How important is scale to the business?
I think one of the clearest forms of scale that we provide is our sales team, right? And how they manage the storefronts throughout the life cycle of a game, which is quite long now. So through the active participation of our sales team, we can add 20 to 60% to the annual revenue of a game every year. So you multiply that by 5, 6, 10 years, that's quite meaningful, right? We also have costs that we negotiate with people like our PR firms and other software providers and things like that, that we can demand a better price, and the developer benefits from that as well. We also build internal technology because we can through other games, and we can offer that to these developers as well. So that's also something that they wouldn't be able to enjoy on their own, or be able to invest in on their own.
So your business model has evolved over time. So having started off as a pure indie publisher, you've now brought on some of your own IP, so you've got more of a hybrid model. Mm-hmm. How has that influenced the business?
Well, it's interesting because our business is always changing. It's something that I really enjoy about it. bringing on new teams within the company has not been as disruptive as you may think it would be. What has changed is our ability to further invest within these teams. And a strong benefit that we're seeing right now is we've invested in technology to help not only that game, but then we can bring that technology to other games within our portfolio, including the third party. So it's been a boom for all across the board.
Harry, many thanks for joining me today.
It's been a pleasure. Thank you.
Graeme, many thanks for joining me today.
Pleasure.
So Devolver describes itself as a developer-first publisher.
Yeah.
Can you explain what that means in practice?
Well, in the good old days, or the bad old days, what would happen when you went to find a publisher, you would need funding. That was always the kind of relationship. You'd be asking for funding. Is that publishers would typically take the IP off of the developer as part of the deal, or if they didn't do that, they would take sequel rights, which was effectively capture and kill. Myself and Harry, we had previously been on that side of the fence, and we always felt that the creator should actually own the intellectual property. They should be the owners of it. And so the business model at Devolver when we started the company was that's baked in. So the developer always retains their ownership of IP, but also we don't take sequel rights. So the developer is absolutely free. At the end of our relationship of publishing that game, they can move on to work with someone else. So yeah, that's the bedrock of our terms, if you will. And then if it sort of unfolds from there, we think we're here to enable the developer, and that might mean help them produce their game on other platforms. It might mean quite simply build the IP in terms of our marketing and PR. And when we do promote games, we promote the developer rather than Devolver. So yeah, those are the kind of principles that we started with, and they're still the principles we operate with today.
Thank you. And you've talked about how you're improving your operating model, particularly with respect to portfolio management and the cadence of title releases. Can you discuss that?
Yeah, the cadence is tricky because we have a number of releases in any given year, and we feel that the number, if it's too many, then we lose relevance. We'll be going to the same place, trying to elicit a response from the same audience to buy another game. Obviously, at the same time, we're also trying to grow our audience, so you could argue that that's also part of the task. But we do think that there's a balance as to how many games we can be pushing into the market at any given time. So that's something that we always think about. It's quite complicated because the games we sign rarely come out when we thought they would, so they tend to move around. We're trying to get better there as well. That's another thing that all publishers will always talk about. Getting games to come out within that window that you hope is the biggest challenge, right? So that's part of it. Improving our performance is something where we look at how can we take any of the games we work on and achieve a better outcome. So an easy example would be our team in China. So we have a small team in mainland China, and their job is to literally find ways to reach the consumers there. And so growing the business, we now have our own dedicated resource for Japan and Korea. And again, it's how do we get better at finding those consumers there. So we're a very inquisitive group of people, and we like to look at the world from the point of view of we know that sitting here in the UK does not allow us to easily sell games in Japan, so we have to go there, have to investigate the market, spend time, and get better at understanding the sort of promotional cycles there, because they again are different from they are here. So yeah.
So you talked in the results about how you're using technology, data and AI to improve your processes. Can you talk about that?
Yeah, so the technology piece would be that we acquired a company a few years ago called System Era. Part of the reason we were interested in working with them is that they have what we call games as a service as a model, which is Astroneer, which is now in its 10th year of being out there. And so they've got very good middleware for tracking player behaviors, what players are enjoying, also harvesting the feedback players give to help them understand how to keep the game relevant, add more content, or improve areas of the game that perhaps players feel need that improvement. So we took that middleware piece and looked at that and thought, how can we use that across other parts of our portfolio? Because understanding what the player is actually enjoying allows you then to invest more money and time in making that feature stronger or adding more content. And if we see things that players aren't engaging with, that might tell you, well, actually that feature, you don't need to continue developing it. You can focus elsewhere. So that's just one simple piece of this. But then it moves into things like consumer sentiment. What do people like? Why do they like it? Or, yes, also what don't they like and why not? It just helps us at a sort of portfolio level have a better view of what we're doing. It can also help us understand in specific instances, this is a game that people would like more content for. So again, that helps you look at expanding that game, adding more content. The goal is always to be relevant to the player. And so anything we can do to enhance that is something that we're very focused on.
Very interesting. And then turning towards your back catalogue, so your back catalogue's accounting for a growing proportion of your revenues. Can you discuss that, and also, what levers are you sort of pulling to extend the monetization cycles of the games you've brought?
Yeah, I mean, the great thing about back catalogue is that it tells you that you build an audience, they move off into places like Discord or onto Steam forums, and they're talking about why they like your game, what it is about the game that they think other people should, a reason for them to maybe join in. So that's just one piece. But then, of course, back to this kind of lovely circle of well, why don't we make more content? You can even ask the audience what kind of content would they like. And one of our subsidiaries, Firefly, looked at their original game, which they released back in 2001. And we're looking at doing an enhanced version. And they just went to the community and said, okay, what is it you'd like to see us add? What are the features that you'd like to see more of? And that led them to make an enhanced version of Stronghold, which they released in 23, then Crusader, which they released last year. And that kind of engagement is so well rewarded because people think, oh, you've listened. So that sort of turbocharges your back catalogue. And you'll see a lot of that in different instances with games where we're just saying to the community, what would you like to see more of? So more investment into the back catalogue is a key principle. In terms of levers that you can pull, I mean, you're looking at how you can engage with Sony, with Microsoft, with Nintendo, with Steam, and participate in their promotions. Because a function of back catalogue is discount, and getting your discounts visible just turbocharges. I've used that too many times perhaps, but it just literally lifts the performance. And our store teams are doing this on a, let's say, weekly basis, looking for promotional opportunities.
Fascinating stuff. Graeme, many thanks for joining me today. Dan, many thanks for coming in.
Thank you.
And turning towards the financial profile of the business, can you discuss how we should expect that to evolve over time, and the balance between investment in titles, revenue visibility and margins and so on?
For sure. We've published 150 games over the lifetime of the company already. We bring out 10 to 15 a year of new titles. And so those 150 games have their legacy revenue. They have a lifespan of 10, 15 years. It's extending. And that's our back catalogue contribution, which is 2/3 to 3/4 of annual revenue comes from historic games published in previous years. And so the front catalogue, the new releases, they'll generate an extra impetus for the back catalogue. And that's the way we build our revenues up from 30 million 10 years ago now to over the 100 million. And we've had a 15% CAGR, or annual revenue growth rate, over the last 10 years. And we've come out of an industry slump in 22, 23, and we're seeing our growth accelerate again, which is exciting for us. In terms of the business model, we have not only the new releases each year, but also partnership deals with the big platforms, the Sony, PlayStation, Microsoft Game Pass, Apple Arcade, so on and so forth. And they often will commit funds to new titles And in total, those platform deals account for about 10 or 15% of revenue each year. So that's another slice of the visibility of revenue that we can see going forwards. It de-risks games that we're spending money on upfront over 2 or 3 years. When we release the game, we get the recoup of that when we have these platform deals in place. In terms of margin expansion, we're benefiting from the introduction of more of our own IP, our own titles from our development studios that we own in 4 different countries. This year we'll see half of our revenue coming from first party, our own titles. That's much higher margin for us because we don't pay out royalties. If it's third party games, we pay out royalties between 70% to 50% we'll pay out to the third parties. That's after we recoup the cost of the game. So we're funding 30 million, 35 million a year across a pipeline of 30 titles in future, which will come out in the next 3 years. And after we recoup each of those, we start to pay out royalties if they're third party. So we're expecting our gross margins to continue to expand from the low 30% into the mid 30s, and we're aiming for 40%. And we see a lot of operating leverage kicking in. This year, we in 2025, the second half, we saw very strong operating leverage kick in. We generated all of our profit in last year in the second half of the year as revenues expanded.
And turning towards capital allocation, I guess you've got a strong balance sheet. You're profitable, and you're growing with operational leverage coming in. How do you balance your priorities in between your own IP, portfolio development, maybe even M&A? Yeah, what are your priorities there?
Yeah, those are the 3 buckets that we look at. It's our own studio development, which we have studios in 4 countries. And I mentioned that we spend 30 to 35 million a year on game development overall. That includes for third-party studios, where we'll fund their game for 2 or 3 years, then recoup upon release, and then share the royalties afterwards. So those 2 buckets of our own internal studios, third-party investment, have been the bedrock of our investment. But now, as we're becoming more profitable and starting to throw off cash, we are open to and looking for good opportunities to acquire, particularly IP that may be out there that requires a new owner to reinvigorate it, to take it in a different direction, to benefit from all the positives and all the strengths that Devolver has. So that's something that's of interest to us, and other opportunities as well. So we have been acquisitive in the past. Systemera is our biggest acquisition from 2 years ago that completed our strategy from IPO of having exposure to more expandable games. And this year and beyond, we're very keen to continue looking for those.
And turning towards, looking towards the future, and what milestones should we be looking for? I mean, you discussed some of the key capital allocation pools, but what would you categorize as the key milestones that investors should look for to measure your progress?
Well, we have a pipeline of over 30 titles for the next 3+ years. Within that, we have 6 or 7 large or larger investments into our own successful franchises. We have 10 franchises that collectively have generated nearly $500 million of revenue since 2010. And some of those franchises have had sequels and continuations. It might be free content, downloadable content, paid downloadable content, definitive editions or remasters, sequels, or spiritual successors in the universe. And some of those franchises have generated over $100 million. So we recognize the value of continuing to invest in those successful areas, those franchises where there's a big gaming community, big tribe of people who love the titles. So I mentioned 6 to 7 out of the 30 are of those more substantial, more successful games. And we're looking to see our margins, for gross margins, go up to the 40% level. We'd like to see our EBITDA margins come into the teens. And we're really looking forward to expanding our geographical mix as well. We're very geographically spread between Europe, North America first, then Europe, and Asia Pac. We see the Asia Pacific region in particular as an area of great potential. China already accounts for 15% of our revenues and more units. But Greater China, Japan, and Korea are a big opportunity for us.
That's very interesting. So actually a really nice blend of operational sort of growth and margin milestones for investors to look forward.
That's right. Yeah.
Dan, many thanks for joining me today.
Appreciate it. Thank you.